What you are about to hear might change the way you see money, the economy, and even your own future. Because right now the global financial system is quietly entering a phase that has repeated many times in history. And most people only realize it when it is already too late. Imagine waking up one day and realizing that the stability you trusted was never truly stable. It was just temporary, built on rising debt, borrowed time and confidence that can disappear much faster than you expect. And the most dangerous part is not when everything is falling apart. It is when everything still looks normal, when people feel safe, when markets are rising, and when no one believes anything can go wrong. And this is exactly where things start becoming dangerous, if this sounds extreme. Stavis me. Because in the next few minutes, you will start to see a pattern that has shaped every major rise and fall in the economy. And once you see it, you cannot unsee it, and here's the part most people completely ignore. Before we go deeper, if you want to understand how money, power, and global systems really work, make sure to like this video and subscribe to Dalio Explained. Because here we don't just talk about money. We break down the hidden structure behind it in simple language so you can actually understand what is happening in the world. Now let's slow down and understand something important. Every economy in history moves in cycles. It rises, it peaks, and then it falls. But the most dangerous moment is not the crash. It is the moment just before the crash, when everything still looks perfect. People are confident, jobs exist, markets are rising, and at the same time debt is quietly growing faster than anyone realizes. Now pay attention to this. This is exactly where we are entering now. A phase where everything appears stable on the surface, but underneath pressure is building silently. Like a storm forming far away that no one is paying attention to yet. And this is where the real problem begins. To understand this clearly, we need to go back and see how this always begins. When an economy starts growing, money becomes easier to borrow. Banks feel safe, interest rates stay low, and people start using credit for everything. Homes, cars, businesses, even daily life. At first this creates excitement. People feel richer. Spending increases, companies expand, governments spend more, and everything looks like success. But here's where the illusion starts to build. What most people do not realize is that this growth is not fully real. It is powered by debt, and debt is not free money. It is future pressure. The more you borrow today, the more you must pay tomorrow. And this is the trap. But in the moment, no one focuses on tomorrow. They focus on now, and that is exactly how the cycle grows. Because when debt increases, spending increases, and when spending increases, everything looks like growth. But in reality, it is borrowed stability, and this is why people get misled. History has shown this pattern again and again. For example, in the 1920s, the United States experienced one of the biggest economic booms ever. The stock market was rising rapidly. People believed they had entered a new era where wealth would never stop growing. Ordinary people started investing not just with their savings, but with borrowed money. Banks expanded credit aggressively, and everything looked unstoppable. But here's what they didn't see. Underneath that excitement, the system was becoming fragile because it was built on debt. And when confidence finally shifted in 1929, everything collapsed. The stock market crashed. Banks failed, unemployment surged, and millions of people lost everything almost overnight. And this is how fast things can change. Decades later, in 2008, we saw the same pattern again. This time in the housing market, banks were giving loans to easily. Even to people who could not truly afford them, housing prices kept rising, which made everyone believe the system was safe. And this is where history repeated itself, but it was actually a debt bubble growing silently. And when that bubble finally broke, it triggered a global financial crisis. Jobs were lost, savings were wiped out, and entire economies struggled to recover. Now stop for a moment and think about this to completely different times. Two different industries, but the same exact pattern, growth fueled by debt. Confidence turning into overconfidence, and then collapse. So what does this tell us? The real question is not what happened. The real question is, why does this keep happening? And the answer is simple: because human behavior does not change. When money is easy, people feel safe. When people feel safe, they take more risk. When risk increases, debt increases. And when debt becomes too high, the system becomes unstable. And this is where everything starts to break. Eventually it reaches a point where it cannot continue. And then it corrects, not smoothly but painfully, through recession, inflation, or financial crisis. And here's what makes today different. Look at the world now. Global debt levels are extremely high. Governments are borrowing massive amounts. Companies are operating with heavy leverage, and individuals are depending on credit just to maintain their lifestyle. On the surface, everything still looks normal, but underneath the same pressure is building again. And this is the warning sign. This is why the current phase of the debt cycle is dangerous. Not because everything is collapsing today, but because everything still feels stable enough for people to ignore the risk. And when confidence is high, preparation is low, and that combination has always been dangerous in financial history. This is exactly what thinkers like Ray Dalio explain. Economies move like machines in cycles. They expand when credit is easy. They peak when optimism is highest. They decline when debt becomes too heavy, and they reset when the system can no longer sustain itself. And this is not random. It is mechanical, driven by human behavior. Greed, confidence, fear, and correction. And because human behavior does not change, the cycle also does not change. Now look closely at today's signals: rising cost of living, increasing financial pressure, uncertainty in many economies, and growing dependence on credit systems. But most people do not recognize these signs because daily life still feels normal. Jobs still exist, markets still move, nothing feels urgent, and that is exactly why it is dangerous. Because every major turning point in history starts like this. Not with sudden collapse, but with silent build-up that nobody pays attention to until it becomes unavoidable. So here's the key takeaway. The real lesson is not to predict exact crashes, because no one can do that perfectly. The real advantage is understanding direction, understanding cycles. Because once you understand cycles, you stop being surprised. You start being prepared. You stop assuming growth will last forever. And you start thinking long-term, because economies are not stable systems. They are living cycles of expansion and contraction. And those who understand this are never fully shocked when change arrives. And this leads to one final question. If every major economy in history has gone through the same cycle of debt, expansion, and correction, then why would today be any different? And if it is not different, then the real question is not whether change will happen. It is who will be ready when it does. So let me know in the comments what you think. Do you believe we are entering another major reset in the global economy or not? And if this video helped you understand something deeper, share it with someone who needs to see this perspective. Because most people only realize it when it is already too late. And remember, on Dalio Explained, we break down complex systems into simple ideas, so you can understand what is really happening behind the surface. Stay aware, stay informed, and I will see you in the next one.